Goldman Sachs reported its second quarterly loss ever, and Bank of America reported their earnings, and they were just kind of so-so. I'm here with Teddy Weisberg from Seaport Securities. So, Teddy, obviously third quarter, not a good one for the financial firms. JP Morgan, when they reported their results, they only got there by an accounting adjustment. So really, when we look ahead for the financials, it still seems like we've got a lot of headwinds.
Well, this is probably a question better asked of a bank analyst than of a floor trader. But the reality is that the government has basically broken their business models, and they're being forced to reinvent themselves as institutions. Listen, it wasn't so many years ago, a couple of years ago, that Goldman was a broker, not a bank, right? We don't seem to have any more brokers anymore. Now all the big brokers are now banks, and it goes back to the late '90s when Glass-Steagall went away, and the banks could get into the brokerage business, and probably therein lies the problem. And the government never should have allowed that to happen. They did, and clearly to fix the banks, they probably just should reimpose Glass-Steagall, but they're not going to do that, because I never met a politician yet that ever admitted that they were wrong. So that's not going to happen. But in terms of Bank of America and perhaps not Goldman Sachs so much, because they're really two very different institutions. But they help their bottom line, which they've been doing quarter after quarter by basically reducing their loan loss exposure, and so that goes right to their bottom line. And so they are basically shrinking their balance sheets, not growing their balance sheets. So as businesses, they're relatively unattractive. It's hard to know what they're going to do basically to get some juice back into their earnings, because but in the case of Bank of America, with these legacy mortgage issues they have, it looks like, which will eventually at some point will in fact go away. But for the moment, who knows when that's going to be. And in terms of Goldman Sachs, Goldman Sachs is, as long as I've been in this business, has been the 800-pound gorilla. But they are being forced also to kind of reinvent themselves. I wouldn't bet against Goldman Sachs, and I wouldn't bet against Bank of America. But the issue is, as investors, we're in a very, very difficult environment. We're going to probably remain in a very difficult environment. Why go look for trouble? There are so many other companies out there that are more interesting for a lot of different reasons. And I would say that the financial sector, which has always been kind of the lightning rod for the stock market, they are so beaten up, and the path ahead is so difficult for them. As institutions, listen, they have no problem making money, but the problem is they're in a shrinking mode, not in an expansion mode. And I just think there's probably more fertile areas to play in other than the banks.
Right. Well, you heard it from Teddy. There are still a lot of challenges for the financial sector. And that's just a little factoid here. Looking at the market cap for Goldman Sachs and Apple as a comparison, back in 2007, Apple had a market cap of $79 billion, Goldman 101. Goldman now only has a market cap of $48 billion, and Apple 389, and that says it all. That's Teddy Weisberg from Seaport Securities.